Namaste and welcome to another presentation on forfeiture of equity shares under accounting of shares and debentures. We are studying now illustration 21 from the study material. This particular illustration has got application money, allotment money, call money and share premium, pro rata allotment of shares as per the standard stock exchange basis of allotment. Then after allotment, there is calls in arrears at the stage of allotment as well as under the stage of calls, and the shares with calls in arrear are forfeited, and subsequent to forfeiture they are reissued. That way this illustration makes a good study material for understanding the entire process of forfeiture and reissue of shares. And you can also refer to illustration number 9 on page 15 of the study material, where there is a reissue of only a part of forfeited shares. That is the main difference between the two illustrations. Second, in that illustration, shares are forfeited under two different stages. One at the stage of first call and second at the stage of second call. You can just have a look at it and it might help enrich your knowledge. We will start the exercise and we will divide the whole problem into three stages. First up to calls, then calls in arrears, and third stage we will have forfeiture and reissue. Let's get going. Understand point by point. JB Limited issued 60,000 equity shares of rupees 10 each at a premium of 2.5, means 2.5 is the premium, 10 is the face value, therefore total value is 12.5. 4.5 including premium means application money is 4.5, that is application money 2 plus 2.5 premium, 4.5. The amount payable on allotment was fixed at 4 per share. This is the allotment. This is first application stage, allotment stage, and there is call stage. Allotment stage we need to collect 4 rupees, and an equivalent sum means another 4 rupees was due on a call to be made. The application received were 1,10,000, and after consulting stock exchange the following scheme for allotment was decided upon. What are the categories? 3 categories, A, B, C. We are not interested in number of applications received. What is relevant is how many shares applied for, 70, 35 and 5, and number of shares allotted by the company is 42, 10, 14 and 4, making it 60. Now this is the total input which is given by the illustration. We have to be very specific about this requirement. It was decided that excess amount received on applications, because there will be excess as applied for is more than allotted, that difference should be utilized in the payment of allotment money to the extent required. If it is more than allotment money, it has to be refunded. If it is less than allotment money, you have to collect the allotment money balance. If it is more, we will adjust it and refund the amount. This has got all the 3 cases which we will see. Take the first case. 70,000 shares applied for 3,15,000, that is 70,000 to 4.5. Then what is allotted is 42. For all other columns, the shares allotted are relevant. Only for this column, shares applied for is relevant. 42 into 2, 84. 42 into 2, 0.5, 105 means application money required to be paid is 189, whereas what we received is 315, means 126,000 is what we have received as surplus on application. 315 minus 189 is 126. Now, what is the allotment money? Allotment money is 4 into 42, 168. What the problem says is, excess of amount received, my excess received is 126, would be utilized in payment of allotment money. My allotment money is 168. What I have received surplus is 126. I fully utilize it. What is the balance? 168 minus 126 is 42, which we will be collecting as dues. We have to collect it. There is nothing to be refunded. It is fully made use of. Go to the second case. 35,000 applied for at 4.5 is 157.5. Then 14,000 allotted, 14 into 2, 28, and 14 into 2.5, 35. Means it is 63,000 is what is due. And what we have received is 157.5. Means 94.5 is what we have surplus. Now, what the problem says, to the extent of allotment money we can retain. What is the allotment money? 4 into 14 is 56. But we have a surplus of 94.5 means we can retain only up to 56. If you remove 56 out of 94.5, balance 38.5, you cannot keep with you, you have to refund. This is what it says. Would be utilized in payment of allotment money, and surplus, if any, would be refunded. Therefore, in this case, we will refund 38.5. There is no further balance to be collected. And call money, it is an independent transaction. 4 into 14, 56. Take the third one. 5 into 4.5, 22,500. 4 into 2, 8. 4 into 2.5, 10. 18 deducted from 22.5 is we have a surplus of 4,500, but allotment money is 4 into 4, 16,000. This will be fully used against it. There is no balance left out, but we have to collect the differential amount. 16 adjusted 4.5, 11.5 we have to collect as allotment money. Call money due is 4 into 4, 16. This is the summary of it. What we have is allotment money adjusted against surplus application money, and this we saw it in each case. Therefore, application money 120, premium 150, allotment money on allotted shares 2,40,000, call money we have to receive 12.5 on 60,000, which amounts to 7,50,000. These 5 amounts will enter our journal entry: application money, allotment money, application money, share premium account, allotment money, and call money for making the calls, making the allotment, receiving the money. Then subsequent entries we will pass for receiving cash, receiving money on allotment, refund of this 38,500, receiving of this 53,500 differential, which are all a part of this allotment adjustment. That covers first stage. We are in the second stage, where we said we will go for calls in arrears. It says Sanjay, who was one of the applicants belonging to the category A, had applied for 100 shares. Category A, he had applied for 100 shares and defaulted in the payment of allotment money. How much was the default? If it is 100 he applied for, he got only 60% allotment. 70/42 means he was allotted 60. This is relevant to us because except for application money, all other details require how many shares were allotted. Here what we are given is what he applied for. Therefore, we have to derive this. On 60 shares, what is the amount? He must have paid, he paid 60, 100 into 4.5, 450. Application money was 2 on 60, 2.5 on premium. call money was, allotment was 240. 120, 150, 270, he paid 450. We had a surplus of 180 in his allotment money. What was his call money? 240. What the problem says? He defaulted in payment of allotment money. He was supposed to pay 240. He said, I don't have any money. Means 240 is due, 180 is adjusted. Therefore, his default on allotment is 60 rupees. This is what we have to understand. Now the question comes, there is a call on this 60 shares which is made as per the problem. He didn't pay this. You have no reason to presume he paid this. No, he also definitely failed. If you don't pay on allotment, you will have definitely defaulted on this. Therefore, in respect of the 60 shares, default on allotment is 60 rupees and default on calls is 240. This we have to clearly understand. Then comes the second one. Vivek, who belonged to category C, was allotted 800 shares. Understand this. This was given by the problem. 100 applied. In the second case, they have not given applied, they have given allotted. If 80 is allotted, 800 is allotted, what is applied? 5,000 for 4,000 means it is 25% more than this. 800 into 25% more is 1,000. Understand this and then proceed. What happens? He applied for 1,000, paid 4,500 and application money 2 into 800, premium 2.5 into 800. He was supposed to pay 3,600, but he paid 4,500. We have 900 surplus. His allotment money is 4 into 8, 3,200. He has to pay 2,300. Did he pay? Yes, he did pay, but he defaulted. He failed to pay the call money. What was the call money? 4 into 800, 3,200. Therefore, his default is in respect of calls. Understand the relevance of these four quantities of shares, applied and allotted. Once this is done, now you know for sure we have got allotment arrears to the extent of 60. We have got call arrears to the extent of 3,440. Understand this specifically in respect of Mr. Sanjay. 3,440. As per our calls statement, we were to receive 53,500 on allotment for the balance, but there is a default. Therefore, for making allotment, amount is 53,500, but what is received from bank is 53,440 because there is a call in arrear. In case of call money due, we have 3,440 as arrears. Our call money is 2,40,000. Therefore, when it comes to bank transaction, money received is 236,560. This is the second stage of calls in arrear and net amount received, net dues received. Therefore, what we have done is we have extended the same thing, gross dues, less arrears, net dues and receipt. This is for banking transaction. This is for resolving for application money, allotment money and call money. Now we are in the third stage of forfeiture of shares. We need to understand that under forfeiture of shares, what we normally do is we identify the shareholder in default and his name will be there in the register of members. His name will be removed now, and whatever money he paid, he will have paid for two purposes, one for capital and one for premium. Whatever is paid for premium will remain untouched, and whatever he paid for capital will be in share capital account. That amount will be removed from there and it will be transferred to forfeited shares account. This is the simple process. Remove from the register of members, go to capital account, whatever money he paid which was there in the shareholder's name, transfer it to company's forfeited shares account. Effectively, his stake in the company is removed. What about the payment he made towards premium? It will remain untouched. It has remained a property of the company. It will stay with the company. Therefore, for forfeiture, we have to identify how much the person did pay to share capital account. This is what we are going to do in this process now. Let us proceed. Their shares were forfeited, and for forfeiture account, which will include share capital other than premium. Why they were forfeited? Because Sanjay defaulted to the extent of 300 and Vivek defaulted to the extent of 3,200. How much did they pay? Sanjay paid 450 and he defaulted at allotment stage. That 450 included 150 towards premium, means what he paid towards capital is 300. And if you come to Vivek, Vivek paid 4,500 and he also paid allotment money balance 2,300, 6,800, but it included a premium of 2,000, means towards capital he paid 4,800. This logic you have to understand for the principle of removal from share capital to forfeited shares account. Now, once you have understood this, it is simple. Sanjay paid towards capital 300 and Vivek paid towards capital 4,800. That is what we saw here. 4,500 plus 2,300 minus 2,000. 450 minus 150 is 300. Now, default is 3,500 and shares forfeited and amount removed from capital is 5,100. Keep this in your mind. Then what do we do next? Next stage is reissue. What would they say? And reissued as fully paid up. Fully paid up is, we are talking of the share capital. Share capital is 10 rupees. And first share was sold at 8 rupees. 8, how many shares? 60 shares reissued. Amount received is 8. 60 into 8, 480. Then 800 shares were sold at 6. 6 into 8, 4,800. If we look at it, 480 was 60 into 8 and 4,800 is 800 into 6. Now, this done, you have to ask a question now. What is the face value of Sanjay's shares? 60 shares into 10 rupees is 600. Right? Now, Vivek shares 800, his shares value is 8,000. The question comes, we removed from share capital 300 and closed the transaction. Now we have fresh issued. When you issue fresh shares, it should be recorded in share capital account to the face value of rupees 10. If we have to record 10, I need to put into share capital 600, but what I received was 480. I have a share forfeiture account which I created just now, and if there is a gap in the reissue proceeds, use this money. How much I need to fill the gap of 600? I need 600 minus 480 is 120. I need to get 120 here. Here, 4,800. What is the face value? 8,000. What is the gap? 3,200. Use this forfeiture balance of 4,800 and you transfer the amount from forfeiture account to share capital back. From share capital, we took out earlier for forfeiture 5,100. Now we will be taking back 120 as well as 3,200. That is what we are going to make, 120 and 3,200. Now what happens in the process? Share capital account will be having new shares at the total value. Number of shares is 860 and we have got 8,600 credited into share capital account. Means what happens to forfeited shares account? We initially transferred 5,100 and we transferred from there to share capital again 3,320. Still there is a balance in forfeiture shares account. At the end of reissue, there is a procedure to be done. Forfeiture share account has to be nil, means you have 5,100 was there in forfeited shares account. Now to make the shares 10 rupees worth and credit the account with 860 into 10, 8,600, you removed 3,320. If you remove 3,320 out of 5,100, 1,780 is still the balance in forfeited shares account. Now, what is required is once you reissue, you should close forfeited shares account and transfer it to an account called capital reserve account. This is the last stage. What are we going to do? Forfeited shares account is closed down. Balance in forfeited shares account is transferred to capital reserve. How is it? Now, we have 300. We transferred 120 here. Balance 120. We transfer here. We had 4,800. We transferred 3,200. Balance 1,600. We transfer here. Therefore, at the end of it, your share capital gets 860 shares at the rate of 10, 8,600, and you have got a capital reserve account of 1,780. This is the process which we need to understand and show the necessary journal entries in the books of the company to record the above transaction. Simple. Having done this, you have done all the preparatory steps. Now it is the time to pass entries. First, we take up the money received to the application, 4,95,000 bank account to equity share application account. Second, when we make the allotment, we collect the application money on allotted shares, 1,20,000 towards share capital, 150,000 towards premium on shares, and share application money is debited to that extent. Third comes allotment money on allotted shares, allotment money at the rate of 4. Entry is passed for making the allotment. And out of application money, we have to adjust 1,86,500 towards allotment and surplus of 38,500 we have to pay out. That will be the entry. And once that done, we come to the allotment balance to be collected. We have 53,500 to collect, but we received 53,440 because there was an arrear of 60. Equity share allotment 53,500 is completed with this. Then comes the call money due. We pass an entry for making the call account to equity share capital, and there was an arrear of 3,440. Therefore, we received only 236,560 against the total call of 2,04,000. Next, we are coming here for the sake of forfeiture. As we saw, we remove money from the share capital account. 860 shares, 8,600 has to be reversed. We debit share capital for 8,600 and calls in arrears is 3,500, and forfeited shares account was 5,100 which was lying in capital account. We removed it from there, and that is the first stage of forfeiture. Second, we reissue. We received 5,280 as the cash received. This is what is coming here. Then to show the shares at the face value of 8,600, there is a gap. We transferred from here to forfeiture account 3,320, that is reflected here, and that finishes the entry number 9. Last entry will be forfeiture shares account has to be nil at the end of the transaction. We created it with 5,100. We used 3,320 for making the face value to 10, and still there was a balance of 1,720 which we transferred to capital reserve. That is what we do here in capital reserve account, and with that what we are left with will be Share capital, share premium, and capital reserve. We can validate this with the bank account also. Bank account to equity share application money received. Second, we adjust 1,86,500 out of the application money, but we refund 38,500. That refund is reflected here in the bank account. And there was a shortfall of 60 in collection of the balance allotment money. 53,440 is what we collected as the balance allotment money after adjusting the share application account. In case of equity share call account, there was an arrear of 3,440. We received, as against 2,40,000, we received 2,36,560. And to show the share capital at 8,600, 10 at rupees 10, there was a shortfall of 3,320. We received cash realization of 5,280. That is at the issue price of 8 and 6 in respect of the two classes of shares. And if you look into capital, 270, 240, 240, and 8,600 debited and 8,600 credited. That leads to 6 lakhs of share capital and 1,50,000 of share premium. And we have a capital reserve account which is created at the end at 1,780. And this is reflected as the different net increase in the bank balance of 7,51,780. And that is a matter of pride. You can see this is the template which we used throughout the solution. You can study this in detail, and this could be of a lot of help to navigate through the entire process. And all the entire problem is injected into this template, and we are so happy for it. Hope you enjoyed the session. Thank you so much. Thanks a lot.